Welcome to the Anton Stetner podcast. Today, we're going to be talking about Rocket Mortgage because they just bought Redfin. We're going to talk about why they're doing it, what exactly that means, and is this a big deal?
This is a really big deal. So Redfin's in our backyard. They're here in Seattle.
What is Redfin, by the way, if someone doesn't know? Exactly.
If you don't know what Redfin is, everyone knows what Redfin is, okay? If you're in real estate, you know what Redfin is. We don't need to explain that. But think about this. Rocket Mortgage, boom, just bought a Redfin for $1.75 billion. And people go, does this matter? This matters. This isn't like standing in an open house and there's a freaking earthquake going on in the background. Why would I use such crazy words? Because I don't think people are thinking about this at a deep enough level, what it means for the industry, what it means for consumers, what it means for banking, what it means for data privacy, what it means for monopolies, what it means for commissions. Like, there's a lot going into this that we're going to kind of, go through today, but I want you to understand that as a home buyer, this may have been a pivotal point in real estate history that all of a sudden just started to change everything forever.
For sure.
And we're going to have some winners. We're going to have some losers. And then the question also is like, well, what about these independent brokerages? What about smaller real estate agents? What about Zillow? Okay. What about these unknown competitors? And for those of you who don't know, Rocket Mortgage, second largest mortgage originator in the United States, right behind United Home Mortgage. So this is a big boy. I get it. Not everyone knows who this is, but Rocket stepping in and buying this piece of tech is the second largest mortgage originator buying one of the best pieces of tech. Now, why do I say the best pieces of tech? Redfin is known and loved for their app, for their data, for what they do. Yes, they have a brokerage, but I would say they're more loved for their technology because their brokerage has been shrinking. Another thing that's really interesting is Redfin's lost money since their inception. A lot of people don't realize that. So
when they start?
They've been around almost 20 years.
Wow.
Yeah.
It's like an Amazon story there.
This is like an Amazon story. This is an actual buy the dip story. So section 1 here, we're kind of going to get into this breakdown of what the deal is. So I'll go into the buy the dip. Redfin was just valued at $8 billion in the pandemic. Then, of course, we've talked about it lots of times. Our listeners that are on this journey with us, so as we talk about real estate, finance, the economy, investing, they know that the market started changing as the Fed raised rates, right? And as the Fed raised rates, Redfin's valuation dropped from $8 billion to 1.75, and they're actually less than that. So it's basically a 90% discount. This was a buy the dip opportunity. And then this will go through in second or third quarter of this year. So why has Redfin been struggling and why were they even available for purchase? Number 1, they have been losing money. Number 2, as the market contracted, they were having to burn through more investor capital. So what they have to do, they actually started laying people off. They started having less real estate agents because less transactions were happening, so less revenue was coming in. This is not one of those things where Rocket's doing it out of charity. This is them playing like 3D chess with multiple industries while, half the people are sitting around just playing checkers. But for if you were a Redfin shareholder, this actually represents a massive deal for you because Redfin's value was consistently declining. Of course, there's bumps and stuff, but it's basically been on a downhill slide.
Are they a publicly traded company?
Traded company on a downhill slide. And so when this acquisition happens, all of a sudden their share price shot up yesterday, or a couple days ago, excuse me. And then Rockets went down. So in other words, it was good for Redfin, but the market wasn't 100% convinced it's good for Rocket. I believe it's really good for Rocket. I'm just concerned about the long-term implications here. So Rocket is not just a lender as they buy Redfin. What this does is it allows them to start to control the whole real estate pipeline. It allows them to get an insight into consumer data they didn't have before and essentially start to put together their own little golden ticket. How many million people do you think visit Redfin every month?
Wow. I want to say at least 5 to 10 million.
50. So they bought.
Is that worldwide?
Yeah, it's probably
Yeah.
It's probably worldwide, but it's probably mostly
In the US.
In the US.
Yeah, North America.
So they get immediate access to Redfin's 50 million users that they have through the app. They get this massive expansion of the loan purchase market. They believe they could quadruple their loan purchase market from 4% to 16%. Now, I got to clarify why this is a win for them. When rates are high, refinances are low. So that's what's hurting the mortgage industry really bad right now. So this is going to the top not the top, it's going to the beginning of the food chain so they can get closer to the consumer, get more purchases. They believe there's about 200 million in revenue they could share across both companies. And this allows them to compete with United Wholesale Mortgage, which is number one right now. They lost position to them, I forget if it was 1 year ago or 2 years ago. So this acquisition will put them right back in line to start taking that market share back.
All right. So the reason I even explain this is because I kind of know the significance. I don't know the full, like damage or potential consequences for the market. But the reason I asked what is Redfin is because I think most people think about Redfin as just a listing website where people go there to list their houses.
Yeah.
And then as consumers or people that are going to buy or even sell a house, we're using it as a tool. But what makes Redfin so valuable at $1.7 billion is the fact that even though they've been, at a loss, they're not profitable, why they can sell for $1.7 billion is because really it's just an advertising tool. And that's what I think is important to kind of break down because I think it's leading into some of the things that you're going to talk about. Can you talk about beyond listing, like for the average maybe buyer or seller, why Redfin is significant to the real estate industry and just like buyers and sellers in general?
Well, if you're looking at like apps and ones that have the most usage, and websites that have the most usage, Zillow, of course, is going to be number one. So Zillow's at the top of that food chain. Who's number two? It's Redfin. So Redfin's coming in second in that food chain right there. And what Redfin has always described themselves as is as a technology company. Now, us as real estate brokers, everybody bags on Redfin a little bit. They're like, that's a discount brokerage. That's being a protectionist. That's being a little bit too biased based on your past experience. There are good Redfin agents and there are crappy Redfin agents, just like at anything. And yes, it is a discount brokerage, but you're also discounting their app usage, the amount of data they collect, the amount of consumers that are in that pipeline, and how that pipeline can be used. And how there's that much aggregate data. One thing somewhere in my research in here, between Rocket Mortgage and Redfin, the two of them will basically have access to over 200 million pieces of consumer data. That should be a little bit of a privacy concern. This should be a monopoly concern. This should be this idea of like, well, it might be good for a moment, but what if they become the big bad wolf? And
which inevitably they almost always do.
Which inevitably
because it's about profit.
Because it's always about profit. If you want to know the underlying motivation, look at where the dollars are going. I was going to wait to do this, but I want to kind of go back in history. I'm going to skip over to one of my other ones. I'll come back to this. If you're thinking about monopolies and the government and money, one of the things that's happened before was banks in the early 2000s. When I was just getting into real estate, banks tried to get into real estate. So in other words, Bank of America wanted to be a real estate broker and a property manager. And most people forget about this. And our Treasury Department and the Federal Reserve was helping them and supporting them until what happened was consumers got all up in arms. The National Association of Realtors, which is extremely large, one of the largest trade groups, got involved and started actively fighting back because, once again, the Federal Reserve and the Treasury were supporting them. The banks were hunting for revenue streams. They wanted one-stop shop business models. They wanted to leverage existing client data. This sounds a little bit familiar. And what happened was consumers got scared of that. NAR got scared of that. Real estate brokers got scared of that. And Congress went and passed laws and prevented banks from getting in.
Why is that?
Because of the fear of too much control, too much monopoly,
Too much influence.
much influence.
Yeah, the interest rates, the financing, and just being able to kind of control where it goes.
There's a separation of church and state, generally speaking, in real estate right now, where real estate and lending are not directly tied together. The problem with this merger is it creates a financial incentive to steer them towards the Rocket Mortgage loan product, to maybe not give them the best rate, to maybe not help the consumer as best as humanly possible, to just keep it in-house for monopolistic tendencies. In the early 2000s, they already said that was a bad thing. And the general public and Congress agreed to them. And then today in 2025, we're like, well, that's not that bad. Nothing's changed. It's the same thing. It's history repeating itself. This is my concern. Just throwing it out there. Maybe I got a tinfoil hat on. Or maybe I'm seeing the same things play out again that we've already seen happen. Thank God NAR was there. But what just happened? NAR just had a commission battle for monopolistic tendencies, for price fixing. Interesting. So because NAR's got a black eye right now, will they be able to stop this and beat this back? Probably not. What does this mean for small independent real estate brokers and real estate brokerages? Makes me worry. Makes me worry about the ability of them to strong arm them, to create uncompetitive and unfair practices. Yes, I'm a capitalist, and yes, I like these things, but also I don't like it when things get so big they get out of control where they can damage the consumer or the economy. I'm not saying this is going to happen. I just have some trepidation, some fears, and I wanted to expose that to our listeners.
A good example of this is where we live, we used to have a grocery store that we all shopped at because it's in our neighborhood. And then Walmart moves in.
Yes.
Walmart's so big,
Yes.
right, that this smaller grocery store could not compete with them. Now, I go to Walmart. I shop there. I like the low prices. In fact, they're bringing in some like more quality products, whatever, okay? So this is not against Walmart, but what I'm saying is the natural process of competition from a big business tends to push out the smaller ones. Because when I asked them, this was kind of crazy. They didn't even try to compete against that move in of Walmart. They just
seriously?
knew it was done. So this is kind of an example in my perspective. Like you said, they're going to be such a huge business with so much power. And it's weird to say like a brokerage has power or like a technology company that lists houses that have power against those smaller businesses. I remember when I was an agent.
Yeah.
And that's when Redfin was coming into the game.
Yes.
I remember people being kind of like, oh, are they going to price us out? Because they were doing listings for less than the average agent, whatever the status quo was, right or wrong. And that was 20 years ago. So they've not only gotten bigger, they probably have taken a bigger chunk. That's capitalism. But then if you combine the two, right? What's crazy is it's like antitrust kind of stuff. Like American government usually fights against this. And is there like no word of the FTC coming in? I don't know. Is it the FTC? Who is it that would fight against this? I think it's the FTC.
It would be the FTC and the Securities and Exchange Commission and the Treasury Department and the Federal Reserve.
But does that make sense? How this is just a huge business and it's going to inevitably squeeze out some smaller businesses, which is less competition and then gives them even more influence and control.
So let's give everyone, our listeners, an example. So because they got pushed out of getting into real estate and they were still hunting for revenue, what did the banks do? The banks instead went directly into more lending and they expanded their role in mortgage lending, securitization, and investment in real estate related assets. In the mid-2000s. And then what happened next? The great financial crisis was created, and we went into the meltdown because the banks got crazy with their securitization. That was a direct outcome. When they got stopped from going into real estate, we ended up with the great financial crisis. So we have to be very aware as consumers when we're allowing financial institutions to get into large consumer patterns. What are they going to do? Which direction are they going to influence it? How are they going to push it? What weird instruments are they going to create? And what is needed to keep the guardrails up so we don't run into another great financial crisis? That was a horrible recession. Now, there's some good here, though. Let's talk about consumers. Impact to consumers. Honestly, convenience. So that's an obvious winner. Convenience, one-stop shop. You know what? If they can help me buy a house possibly at a discount, they can give me a rate at a discount. They're going to be able to leverage these platforms. They're going to be able to make better connections. They're going to understand buying behavior. They're going to understand consumer behavior way before a lot of other people do. But, and there's a big but. Well, there's always downsides. So downside, reduction of choice, monopolistic tendencies. There's now, even though they may use their pricing power to drive down prices or drive down commissions, what happens if they then decide, once they've driven out the competition, to just start squishing the market when they control it, or they start raising fees, or they don't allow consumers choice? Because see, when you go to a real estate agent right now, or a real estate brokerage, or Compass, or Keller Williams, or Berkshire Hathaway, or EXP, those real estate professionals generally kick people to a mortgage broker who gives that consumer the best rate possible, hunting down the best deal. If you go to Redfin in the future and they're aligned with only Rocket Mortgage, are they going to push Rocket Mortgage products?
100%. And vice versa, Rocket Mortgage is going to promote on Redfin.
Bingo.
The big question is, will they let other mortgages or banks advertise on Redfin?
No. Why would they?
So it's not even a question.
Yes.
If that's 100% true, it already is pushing out the competition just on the lending side.
Well, they got to recoup the $1.8 billion. So I've paid for my $1.8 billion in advertising. Okay. My advertising and customer acquisition, I now have to recoup that, which means, once again, I'm implying a lot here, which means their rates may or may not be the best. Let's not forget about data and privacy concerns. So, this is an issue right now. People are up in arms about Doge, looking at documents. Rocket Mortgage and Redfin are going to have more data than Doge will ever see from the federal government. It's just for comparison, just to kind of put this into perspective. We talked about this idea of monopolies, but I also want to talk about what's the potential for real estate professionals here. And this should make real estate professionals slightly uneasy. I believe NAR is not powerful enough to push back against this today. I believe that Rocket Mortgage could offer a direct incentive model, discount on commissions or discount on fees because they're controlling a bigger piece of the transaction. And then they'll go for just more of a volume play, which puts downward pressure on commissions and loan origination fees on the lender side. We talked about these traditional brokerages are going to be facing stiff competition, but these boutique ones, I don't know how you compete. It's going to become very hard for the small business, the ma and pa, to compete. I love that even though, we're a small business, I'm a part of one of the largest chains in Washington with my business partner, and we've got a lot of brokers that work for us. So it makes us a force to be reckoned with. So if you're a real estate agent and you're going, oh my goodness, this is another attack on commissions, what can I do? I'm a broker. I got to throw this out here. What can technology never replicate? What can it not do?
The human touch.
It can't be a human. It can't build a relationship. It can't know the super intricacies. It can, but it's going to gloss over it, of the neighborhoods, the school districts, and things like that. So you need to be that hyper-local individual who understands the politics, the economy, the school districts, the crimes, the housing, All of that because that can't be replicated and it can't take away your relationships. You've got to start building your strategic alliances. You need to build your strategic alliances with lenders, title, escrow, with your contractors, and you've got to basically make yourself more of a one-stop shop, because I really feel this is where everything's going anyway. The all-in-one app for real estate. And then you've got to get really good at articulating your value proposition, at describing why you're valuable. See, one thing that brokers need to be awesome at, agents need to be awesome at, is if they could get a discount on a loan fee and a discount on a commission, why should they choose you? And so flip it around. Are there people willing to pay more for a real high level of service or a real high level of expertise? Always. You have to demonstrate that you're that high level of expertise and professionalism. So where are we going to next? Oh, the competitive landscape. So this deal kind of reshuffles the deck and puts things out there. So is the Rocket Redfin duo, is that a legitimate challenger to Zillow? Probably. Zillow itself has been contracting. Zillow tried to get into house flipping. Zillow's tried to get into mortgages. Zillow has not done a good job of this kind of vertical integration.
And Zillow doesn't list houses, right?
Correct. Zillow's just a data aggregator. They just pull the information from the MLS, put it on there, and then they turn around and sell leads to real estate agents. Their whole business is a lead selling business, but they do have the most eyeballs. Zillow's getting about 204 million active users. Rocket and Redfin together will have about 62 million. This is huge. And third place here is CoStar. CoStar is the commercial real estate brokerage entity, if you don't know who they are. They also own homes.com. They ran a bunch of Super Bowl ads. They were okay. I don't know if it helped them grow their market share. It's kind of a three-way battle between them, Zillow, Rocket Redfin, CoStar. I don't know that any one of these three is going to become that dominant player, the app to control them all, to make a little Lord of the Rings reference. I actually think it's probably going to be some fourth player, fifth player we haven't heard of. I think real estate is still in the VHS Betamax phase, where one of them will become the competitor and you won't know what the other one is. Quite honestly, it could even be Ben, my partner Ben Kenny with Place, because they're getting so big. He's got so much data, so many teams. He has a huge shot at it. I think Amazon has a shot at it. I think Google has a shot at it. When Google went and bought Nest and started getting into that home automation, they started getting to the top line of the consumer too. So realize we have all this battle going on for the consumer. Some of it's good. Some of it we just have to go, is this going to be really good? And what are some of the checks and balances? So my prediction is we're going to go through an arms race where you're going to see these tech companies start spending more money on their apps, on their development, on their technology. You're going to continue to see them try to grab more consumers to bring them in. And we're in a race for the super app to control the consumer, for the all-in-one consumer. What I mean by that, I'm talking home renovation, home mortgage, home insurance, title, escrow, purchasing the home, the platform that sells it all. And for our listeners that don't know, the U.S. real estate market is a $36 trillion market. So the app to control them all is for a very big market.
Is that 36 trillion like gross transaction, or is that actual like money made? Do you know what I'm talking about?
I believe that is market value of housing in the United States.
Okay, got it. And then so a percentage of that is a big deal.
Correct.
Yeah.
Correct. Right now, this is really interesting because of the timing in the real estate cycle. Are we good or are we beat up right now?
Beat up for sure.
Okay, so
slow. It's crappy for a lot of agents.
It's slow. It's crappy. They're able to buy Redfin at a discount because its valuation fell off a cliff. Well, that's your quintessential counter-cyclical strategy. Buy when prices are low because things are going to get better and higher in the future. So when I take my hat off and take my tinfoil hat off and look around, I'm like, this is a good buy. This is a good idea because Redfin's trading at a discount relative to what it was just trading at. And Rocket's making a big bet that essentially the housing market's going to get better, that online platforms are going to continue to grow, that we're going to continue to make more searches with our phones, that the consumer wants quicker, easier things to happen, and that they can integrate the home buying experience. I agree with all those things. And I agree that it's strategically brilliant to do it today because the market is beat up, so there's not a better time to do it. And I would have made that. Now, what's interesting is in 2008, Amazon made their massive expansion moves. And just to give you an outside correlation, during the great financial crisis, as it was starting, Amazon started really like doubling down and really expanding at the beginning of that recession. So if Rocket is timing this, and as we come out of the recession, they may get that unnatural lift just like Amazon did and grow super huge. P.S. I don't want them to grow super huge if you didn't catch that. I love consumer choice. I don't like monopolies. Is this a bad thing? Don't know yet. Time will tell us. But I do hope that regulators poke at this a little bit.
When I think about this, I think people are probably not keen on paying attention to this as if it's a danger. Because if you think about it, Redfin's still going to be doing the same thing, right? And they've always advertised services, companies, whatever business want to advertise on there. And that was a give and take. In the early days of Redfin, it was like a discount broker, basically. So the person that's listing their house, they get a little bit of a discount, right? And you go on this platform. In the beginning, there wasn't as much usage of Redfin.
Correct.
But it's like, hey, I'm going to save some money if I'm in a pinch or funds are tight, get a little bit more out. So there was this thing. And then as a person looking at the website, you're like, hey, this is an easy way for me to see listings because correct me if I'm wrong, before that, even if there was a Zillow, you just had to go to your agent, ask them for the listings that were on sale, okay? So it's like this give and take. So as Redfin got bigger, more people used it, and they were okay with the advertisements because it was a good service. So that's what's scary about this. Redfin could actually become an even better tool or even more used tool as, right? Like, this influx of funds, it like becomes better at the thing it's known for, except the give and take, the trade-off, right, becomes just one big advertisement for one thing. It's like if Coca-Cola just advertises everywhere all the time, you better believe, and I love Coca-Cola, but I only drink it twice a year, I might drink a few more Cokes this year because of that. So you could say that already it's a good buy on Rocket Mortgage's part, but as a consumer, if you're only getting one advertisement, you might not ever even know there are other competitors.
You might not realize there's other choice out there that could be a better deal.
You might go to Redfin, look at a listing. A lot of people don't even have agents, right? So they just use the Redfin agent and they're like, yeah, I need financing. It's like, oh yeah, I got you, right? They might not care it's Rocket Mortgage. But the problem is this. They won't even have a choice. They won't make a choice.
Yeah.
And then that's where the issue is.
That's my whole crux of this issue is I am pro-consumer, pro-middle class. And as we do things that prevent consumer choice, that's my worry. I think this was a good buy. I think this was a great strategic acquisition. I'm fearful that what if this limits consumer choice in the future? It also is if Rocket gets too big and we go through another financial crisis, I just don't want to see what happened to us in the great financial crisis happen again. I also think this is going to cause us to lose real estate agents. We've already been on that path. I think the industry is going to continue to get a little bit smaller. I think the professionalism in real estate needs to go up and continue to go up, and I believe it totally has been. I believe that real estate brokers have to continue to articulate their value and to differentiate themselves. So what's generally happened in the past at Redfin is if an agent gets really good working at Redfin, they just generally leave and go work somewhere else. Why? Because they can make more money. And unfortunately, Redfin, they don't make as much money because it's a discount broker. So they just usually leave and go somewhere else. So it goes through brain drain over and over and over again. And there's still great people that work there. So don't misinterpret what I'm saying. But now there's even less incentive, possibly in the future, because what if they start discounting that more and discounting the loan fees more to just get the mortgage? That's going to be detrimental to consumers long term, because then they're not getting the consultation. They're not getting the protection from the real estate broker. They're not getting the best deal possible on their loan. And so the question at the end of the day is, are you willing to trade convenience and a little bit of price to maybe not get the best deal and maybe not get the best advice? Rocket took an amazing calculated risk, and my hat's off to them. And I think we're going to see the app war continue over the next few years to see who's going to spring up, whether it's Zillow, it's Redfin, it's CoStar, or it's one of these other players that isn't a dominant player coming in. And my thought, to be honest, is it's going to be an outside player that's going to come in and disrupt them even a little bit more.